Welcome to the discussion on Ethereum's classification conundrum. We're diving into whether it should be seen as a security, a currency, or a commodity.
I'm excited about that. So where do we start with Ethereum's multifaceted identity?
Well, let's kick it off by noting that Ethereum was originally launched via an ICO, which, due to its centralized control back then, made many think of it
Yep,
as a security. But as time passed, it became more decentralized.
right. The decentralization part seems crucial here, doesn't it? Because once the burden of control diffused, its security label was in serious question.
Exactly. Initially, during the ICO, investors bought into Ethereum expecting profits, meeting several criteria of the Howey test. That really painted it as a security. But once the ecosystem spread control out over numerous nodes, there's an argument it no longer quite fits that strict label.
And that's the tricky bit, isn't it? Because while it shed a lot of the security features, it still retains characteristics that remind people of bonds or stocks in a way.
Yes, it's pretty fascinating. On one side, you have the legacy of investors putting money into a common enterprise with profit expectations, but on the other side, the decentralized network shakes things up.
Right? But then, what about its role as a currency? I mean, Ether is definitely traded, used in transactions, and accepted by various platforms.
True. Ethereum acts as a medium of exchange, pricing goods and services within its own ecosystem. It's like a digital cash, yet it's not recognized legally as tender by any government.
Yeah, so while it's functioning like money in many circles, it misses that legal stamp of approval that traditional currencies enjoy.
Absolutely. And then we have the commodity angle. The Commodity Futures Trading Commission, or CFTC, sees it more as a commodity.
Exactly.
The fungibility and trading on futures markets really back that up.
It sounds almost like Ethereum is wearing three hats at once, but wouldn't that create some regulatory headaches?
It sure does. Think of it like a Swiss Army knife. Incredibly versatile, but when regulators try to fit it into one category, they run into a bit of a trilemma.
Mm-hmm. Some might argue that this ambiguous classification actually helps Ethereum avoid certain burdens of regulation. Would you agree?
Definitely. Without a strict classification, Ethereum can, to some extent, sidestep the full brunt of securities or currency regulations, which in turn supports innovation.
Right? But here's my point. I wonder if that's a double-edged sword. The lack of clear rules might give rise to market uncertainty and potential investor risk.
That's a fair challenge. Regulatory clarity is a double-edged sword itself. On the one hand, too much regulation might stifle innovation. On the other, too little can breed uncertainty.
Absolutely. And when we talk about Ethereum as a commodity, it gets even more interesting because it's traded on futures markets, just like gold or oil.
Exactly, and those futures contracts, like the ones on the Chicago Mercantile Exchange, show that institutional investors are treating it as a tradable asset, a commodity.
Yes, but don't you think that commodity regulations might not fully apply to digital assets given their unique characteristics?
Absolutely. Traditional commodity regulations were built for tangible goods like oil, and now they're being stretched to cover digital assets. It's like trying to fit a square peg into a round hole sometimes.
Right? There's also this notion that Ethereum's versatility might eventually force regulators to come up with entirely new frameworks, right?
You're spot on. Until a comprehensive, globally accepted regulatory framework for digital assets is in place, classifications will keep evolving.
It's intriguing how some jurisdictions have already designated it as a commodity, while others, like some interpretations of SEC guidelines, hint at security features lurking in the background.
Yeah, and that diversity across jurisdictions illustrates the complexity perfectly. When regulatory frameworks like the EU's MiCA come into play, we might see more harmony, or perhaps more
Exactly.
creative loopholes.
Speaking of MiCA, wasn't Ether categorized as other crypto assets there? That seems to offer a balanced regulatory approach.
Correct? MiCA distinguishes crypto assets into different buckets. Ether, not pegged to any fiat currency, falls into that other category. This categorization tries to be flexible enough to support innovation while ensuring some level of oversight.
I like that analogy of the Swiss Army knife. It really captures Ethereum's functionality. But do you think that broad functionality might eventually mean it should be a new category altogether?
That's a really interesting thought. Maybe down the road, with more digital asset cases piling up, regulators might indeed carve out a new category specifically for platforms like Ethereum.
Yeah, and that might help resolve some of the uncertainties investors experience with Ethereum's current classification.
Absolutely. The ambiguity breeds both flexibility and uncertainty. But investors seem to appreciate the innovation that can come with that flexibility, even if some risk remains.
Right? Now let's talk a bit about the potential for reclassification as a security. Some voices say the evolving decentralized nature might not completely wipe out the efforts of others factor, especially with proof-of-stake dynamics.
Yes, that's a hot topic. With proof of stake, validators play a role that's reminiscent of how central entities historically influenced asset outcomes. It could blur the lines again, meaning the potential for security reclassification might still be there.
But isn't that a bit of a conceptual stretch? I mean, if the network is sufficiently decentralized, the influence of any validator becomes minor, wouldn't you say?
I kind of see your point, but the argument rests on seeing validators as a unified group influencing the network, which still fits the efforts of others' vein of the Howey test.
Right? That's a nuanced debate. If validators really act independently enough, then maybe the security tag truly no longer applies.
Exactly, it's a fine line. The evolution of Ethereum's ecosystem continuously challenges conventional definitions. It's like trying to reclassify a shape that keeps changing.
Very true. And we can't forget how rapidly the market itself evolves. Ethereum's functionality for running decentralized apps and smart contracts is a significant part of its value, irrespective of the classification label.
Right. Its broad use cases, from DeFi to NFTs and beyond, really make its versatility the core of its appeal.
So, in a nutshell, while it might not perfectly fit into the molds of security, currency, or commodity individually, its most practical identity right now is as a commodity, at least from the regulatory perspective.
Precisely. Though there's always potential for shifts and maybe even the birth of a new category, for now, the commodity classification has the most traction due to active trading and established regulatory practices in futures markets.
Exactly. And it's fascinating to see how these debates influence both regulatory strategies and investor behaviors, isn't it?
Absolutely. It's like watching a high-stakes tug-of-war between innovation and regulation. The ongoing dialogue only pushes for better frameworks that can capture the dynamic nature of such digital assets.
Agreed. Moving forward, do you think this ambiguity might spur more robust global cooperation on digital asset regulation?
I would hope so. When regulators around the world face these challenges together, they could draft frameworks that are both protective of investors and conducive to innovation.
Right, exactly. Thanks for this engaging and deep dive into Ethereum's classification. It certainly gives us plenty to ponder about the future of crypto regulation.
My pleasure. It's always exciting to explore the layers of such a transformative asset. Until next time, keep questioning and exploring the world of digital assets.